Hello, everyone. Today I want to speak on the subject of what you do with the payroll for bookkeeping. There's actually a correct way to do your payroll's bookkeeping. So let's say you're here in QuickBooks Online, you're having these transactions. You have here from ADP, whichever payroll provider that you use, you're going to have something similar to this. You have this that says ADP wage pay. That's this number here. You're gonna have ADP tax, and that's gonna be something else. Now, what you can do is you can go to your payroll provider, the portal, and you're gonna log in. You're gonna pull the reports that's gonna show what how you're gonna classify everything within the bookkeeping. You'll go to reports here, payroll reports. Here for ADP, I like to do payroll detail summary and then the payroll liability summary. For the time period, I'll select by check date. And then you're gonna go off probably a similar date that you got the bookkeeping through your bookkeeping software here at QuickBooks Online. You'll go to that check, generate report. Here you have it. So here you're gonna see this number right here. You're gonna see this one. You're gonna see a total for that. However, we have to make sense of it in terms of, look at this number here. That is the amount of actual wage pay, the total wage pay. And you're gonna have a different breakdown for that. So you'll go here, this is in the payroll liability report, and you'll see several things. You'll see federal income tax, social security, Medicare, federal unemployment. You'll see a bunch of stuff. What's key to note is that there's a certain amount that's gonna be, the employer is going to withhold, and then a certain amount is going to be contributed by the employer, and it's all going to be remitted automatically. Usually the payroll processor will remit automatically whatever needs to go to the taxing authorities. And so you'll see here this direct deposit amount for the net pay. You'll see total taxes. But how are we going to actually plug it in here? Well, we're going to create a journal entry. We're going to select the date for that payroll. And then what we'll do is we're going to put the net pay as wage expense. Then we're gonna plug in several of the other things that are needing to be paid. For example, here the breakdown is going to be, you take the federal income tax, take the Social Security as well as part of the federal tax. You take the Medicare, and then you're going to actually take as well the employer contribution and add it all up. This is all federal. So it's gonna go into the same category. The total we come up with is what it shows up here as well, 755.17. So we would go back to the journal entry. And we're gonna increase this federal taxes payable account by 755.17. Is that right? Yes. Now we're gonna go down here. This is the state part. We're gonna take whatever is here. State income taxes, that's something that's withheld. 74.44. If we have it as a separate chart of account, state income taxes payable, we can add it in there. Now we have state unemployment. We could have a separate chart of account there. Now we have this one, which is the CASD, or the California State Disability Insurance. That's just $30. Notice here, with this we have the total. The total is something, one second here, let me pull that out. Something similar to this, right? 871.28. 871.28. Why? Because these are all the payroll taxes that are going to be paid. That's really what that transaction represents. You're remitting those amounts to the taxing agencies, and however, you create them first as liability accounts, and then once that transaction comes through the bank feed here, you're going to reduce those liability accounts to zero, because that's being remitted, that's being sent out to the taxing agencies. Okay, that's well and good, you might say, but what happens to this? How do we balance this out? Well, we still need to input the wage expense, the actual expense that we're seeing here, 2,730.72. Okay, cool. But this is not yet balancing here in our journal entry. One thing, if you're not an accountant, you might notice that here in this journal entry, whenever you make a journal entry, it needs to balance out. Debits and credits need to balance out when you're making a journal entry. What's missing here? What's missing is the payroll tax expense. We have here $268.67. Now let's see if that is actually something that makes sense. Let's go back here and figure out if this is matching our payroll tax expense. How do we figure that out? We're gonna add up the employer contribution portion all this row here, employer contribution, down here, all this sorry, not row, column. You add up all this column of employer contribution. What is that going to give you at the end? Well, here it is. Here's the total, $268.67. Is that right? $268.67. I think so. And that's how we get this balanced out journal entry. Okay, I see what happened there. That was an error. This should have been wages payable. There we go. Now we'll be able to reduce the wages payable. We will just go to this transaction here within your bank feed and put it towards wages payable. That'll reduce that wages payable liability to 0. Number 2, we have this amount here. Now for this one, we can go back to our journal entry. Let's pull that back up again. Change the date here. And what we're gonna do, we're gonna take a look at all the liabilities. Remember when we had all these liabilities just by themselves and it matched that number? Well, these ones are gonna go back to that transaction here. You'll go split that transaction, and then you're gonna go federal taxes payable. We'll come here, $755.17. Now you're gonna do state income taxes payable, $74.44. We're gonna save this. You can go save and close. State unemployment payable, $11.67. CASD payable, California disability, $30. And it should reach to 0 here. You would go apply and accept. And there you go. Now, one way to check if this was done correctly, if you go to reports, you go to your balance sheet or the period you want to consider. So this check was run on the 7th of June. Let's take a look at what happens there. All these liabilities, federal taxes payable, state income taxes payable, wages payable, state unemployment payable, CASD payable, all of those will be 0 unless you had some other prior liabilities in there. Then it won't be 0, but if you had 0, it should come back to 0 because ADP remitted those to the taxing agencies. Yeah, that's it for this one. I hope you learned something about how to do your payroll bookkeeping. Make sure to leave a comment, share, subscribe, and if you need some help with your taxes or bookkeeping, make sure to contact us. Thank you.